Recently, I was browsing the internet and what I saw over and over and over is everybody talking about hemp stock. So immediately I went into Google and typed in hemp stock. And right away, what I could tell is that the stock is at one of its lowest points as of late. But then I thought to myself, what in the world is hemp in the first place? And is this a potential investment opportunity? In this video, you will find out. So the first thing that I did in order to understand the business a little bit better is to visit the company's website. And as you can see, they do a really good job in terms of providing this like modern kind of design and branding. And as you can see, the company offers the potential solution, and that's what we're going to talk about that later, to different problems that people have. Now, some of these problems or these topics are a little bit of taboo, which actually work really well and in the company's favors, but you can see the different problems that they try to solve. And as you can just tell by the branding and the way that the company communicates to its customers, is definitely targeting a younger audience. Now, the company is called Hims and Hers, but I think originally the company was mostly targeting men. Now they're expanding into also targeting women as well. And to put it very simply, what I found out about the company is that the way that they operate is simple. They have a whole bunch of different licensed medical providers, and they have these providers all across the US. And what they do is they match these providers to a particular customer that wants to solve any of the problems or issues that we mentioned from before. And then what they do is those providers, then they ask them a whole bunch of questions. They go through a whole different process, and some of those customers may actually get recommended different medicines to address some of these concerns or issues. And then what the company does is obviously they match the provider to the customer, but then they also provide the medicine that was recommended by the provider to the customer. And this is really where the company makes most of its money. Now, after learning more about the company, I thought to myself, okay, so this sounds pretty interesting, but why is everybody talking about this particular company? And this is when I found out that what the company does really well is to have very appealing marketing messages. So in terms of their packaging, you can see that these are the different packages that they utilize. So they actually look harmless when the customer gets these products on the mail, so they don't look bad from that perspective. But they also do their marketing in a way that's very aesthetically pleasing to the eye. So as you can see, they have a whole bunch of different products, and the way that they market it really speaks to the millennial audience. So for them, it actually becomes a very compelling solution potentially to solve some of the issues that we mentioned before. But then they also apply some more risky marketing strategies, let's just say. So for example, these are like some of the things that they do on billboards just to get people's attention. And then from that attention, then people probably go ahead and look them up on social media to see what's going on. And then this is where they found out more about the company's products, and some of them become interested. So virality is something that the company really has strong and that is really going in the company's direction. But then I thought to myself, okay, this is great that they're really good at marketing, but is the product actually good? Because if the product is not good, then they can get a whole bunch of customers and then lose them the next day. So this is really where I dove deep into different reviews. So I read so many different articles like this one. I actually watch a lot of YouTube videos of people sharing their experience using their different products, look at different reviews and review sites such as this one. Obviously, we also have to look at the good old Reddit, and then also just looking to see what a whole bunch of different doctors and physicians were saying about the company. And what I found that once I think about it is actually not that surprising is that the reviews are mixed. And the reason why is because in the health and wellness space, people sometimes they have very high expectations of what you can get with these different products. And when those expectations are not met, then you have a minority of people that are really loud expressing their concerns. And to be fair, like that's completely fine, but it is something to be aware of. However, most of the people actually experience positive results using the company's products. So that was good to see. Do keep in mind that, some people will have some very bad things to say about the company, and some of it may not be justified just because they didn't get the results that they expect. Like that's kind of like something that's like like embedded into using a particular kind of like treatment. It may not work the same for everybody. But one metric that I was really interested in finding, because this metric really speaks to the value of the service that you're delivering, is the retention of the customer, especially because this is a subscription service. So you really want to have a strong retention rate so that you keep that revenue going and you don't lose that, the next month, right? And so what I found locally is that 82% customer retention rate is what the company currently has after 3 months, which I think for this kind of product is actually really good. And looking more deeply into this, what I found is actually industry leading. So this was something that was very surprising to find. Then I looked at the market report just to get a rough idea of what we can expect for the company in terms of growth, which will be critical to the stock price prediction in the end. And what I found here is, first of all, the market is quite big. It's actually really massive. And then not only that, but the market is growing at a very high rate. So as you can see, a CAGR of 25% almost. This is absolute insanity. And this means that if the company can execute well, it can really grow its revenues a lot. But the key aspect to this is if the company executes well. And for the company to execute well, it needs a really good management team. Now, luckily, as I did my research on the management team of the company, what I found was actually very promising. And this is because first, the CEO, he's actually really good in terms of marketing and scaling different ventures. So you can look at some of his experience here. But the company also has a good mix of executives that have that really good experience in terms of like scaling different businesses and having that direct to consumer experience. But then on top of that, the other area that's key is to have the medical expertise. So as you can see, the company does have a really good mix of the people that have the medical expertise, and they not only have it, but they have it at the highest levels. So this will enable the company to navigate through a whole bunch of different factors that happen when one does business in the medical space. So whether it's changes to regulations, whether it's changes to the way that the market operates, I think the company is really well set to adjust to those different things. But this doesn't matter if the company does not have a good financial health and a good financial base to operate from. So this is where I use the YSheets add-on, and I just type the company name, click on get data, and then from here I started digging into the company's financials. And what I found was the following. First, the company is growing its revenues very fast. So as you can see, we have a pretty high rate of growth in terms of the company's revenues given the history of its operations. And not only that, but what was really impressive to me is the fact that a company growing this fast in the last fiscal year is actually profitable. So this is very promising because it means that moving forward, the company does not have to incur losses and then dilute shareholders or raise debt to be able to finance these losses. On top of this, its current balance of current assets and current liabilities looks very healthy. Shareholders' equity is consistently growing. And most importantly, the company's free cash flow positive, and the cash flow is growing at a pretty good rate as well. Now, altogether, this brings us to the final part, which is the price prediction. So as you can see, I built this model right here using YSheets formula. So for example, this formula right here is what allows me to retrieve the revenue. You can also do this for metrics like price, market cap, and shares outstanding. And this works on Excel and Google Sheets. So be sure to check it out. This will really support the channel. Now, moving on, what we can see is that in this model, I have a revenue growth of 30%. And this is very much justified given the company's current level of growth. Now, moving forward, I don't think we can expect like this, like 70%, 65% growth rates moving forward because the company is actually quite big now, but I do think 30% is reasonable and it's in line with what analysts are expecting for the company and what the company itself is expecting and forecasting. At the same time, we have a terminal price to sales ratio of 3, and this was determined based on past historical numbers. Again, all this data is obtained with YSheets, but as you can see, the price to sales ratio has hovered around this number, and I think 3 makes sense given that if the company continues to grow at this particular particular rate, a 3 multiple actually makes a lot of sense and is quite reasonable. And then lastly, we have the discount rate, which I currently have around 13%, just given where interest rates are at currently and the company stage where, you know, the company is not massive. So we do have to ensure we get a higher return than companies that are already established and everything in the marketplace. So this gives us a price estimate of around $50 per share. Currently, the company is trading for $47 or roughly $48 per share. So there is upside, but what I would consider is this. If you're interested in this company and you want to start to build a position, I think the current stock price allows you to do that. However, what I would be even more strong in really investing a lot more would be if the price drops a lot more and there's no, like, you know, some real reason for that to happen. And then if you're just holding the stock, you know, you can continue to hold it. Perhaps you can add a little bit more depending on how comfortable you feel with your position. But again, always make sure to do your own research before making any investment decisions. Now, I love to hear your thoughts about HIM stock, so be sure to let me know in the comments what you think, and I'll see you in the next one.